Hey everybody, Rob Maurer here, and today we are talking about Twitter. Twitter has filed suit against Elon Musk in regard to the proposed termination of the Twitter acquisition. I know some people are a little bit tired of hearing about this, but it is one of the biggest stories in business right now. It's got ramifications for and reflects on Elon and by extension Tesla, so I still think it's relevant. We'll still have to cover it. And it's a relatively quiet news day for Tesla. We don't have a lot of other news otherwise. We will cover that here at the beginning, though, in any case. So starting off, Tesla today faring a little bit better than the market, up down about 0.5% to close just below $700 per share, while the Nasdaq was down about 1%. So a little bit of a better performance from Tesla. Of course, today not super relevant because a lot of the market action is going to be for the week is going to be determined tomorrow, as we do get the CPI report, Consumer Price Index report, about an hour before market open. So all eyes are going to be on that. Expectations, I think, have risen a little bit in recent days. Right now, I've seen estimates anywhere from a year-over-year increase in the headline number from 8.6% all the way up to 9%. As we can see here, that's what Deutsche Bank is expecting. The mean expectation seems to be somewhere right around 8.8% for increase in CPI, which would be a 1.1% increase month over month from the May report. As for core CPI, which of course excludes food and energy prices, which might be a little bit more relevant sometimes or more meaningful than what we see with the headline number. Looks like the expectations there are set for a 5.8% increase year over year, which I think is about 0.6% increase from May. So when we talk about that core CPI, as we've talked about before, we have seen that peak back in March, and it has been on kind of a steady decline here, couple hundred or 20 basis points or so per month. So it looks like the expectation is for that to kind of continue. Anything higher than that, I think, would be a bit of a red flag, but we'll see tomorrow. The White House has kind of already been downplaying this report because, here we've got a couple of quotes both on Monday and then today, just saying that some of this data is kind of already out of date, which I do think is a relatively fair comment to make. We've already seen gas prices start to decline here in early July and even through the second half of June. So I think it is fair to acknowledge those things as we go into, obviously, the Fed meeting and interest rate decisions later in July. So obviously a big report tomorrow. We'll cover that tomorrow, what the ramifications are, but definitely one that is going to be very actively watched. Something that we can use to kind of determine what expectation shift happens because of CPI will be the CME Group FedWatch tool. We've talked about this before. So this is expecting a 75 basis point increase to the target interest rate when the Fed does meet. But there is right now, under their methodology, a 9% chance of a 100 basis point or a full percentage point increase, which obviously, if this increases, stocks will probably decline based on those higher expectations. So that's kind of why we're watching CPI and what the takeaway is going to be in terms of the market. So we'll see what shift happens here. Right now we're at 90% for 75 basis points, about 10% for 10 basis points. So it'll be interesting to see how that moves with the report tomorrow. All right, getting into some of the more Tesla related stuff, we've got an update here from Sandy Munro on the 4680 teardown that is ongoing. They're having a little bit of trouble getting into the pack. So we looked last week at how they were, just sort of cracking the top off the battery packs, revealing some of the foam casing there in between the cells. And right now what Munro is saying is that this is making things much more difficult than what they had expected in terms of being able to tear this down and continue on with their videos and their takeaways. They're still working on it, so they're just saying it's going to be a few days delay in terms of the videos and more progress on that teardown. But what Corey was saying here in this video was that this essentially is bringing, I'll just direct quote him. He said, repairability of this is essentially zero, just because of, how densely packed and, shouldn't be too surprising with structural pack, but just because of the construction that Tesla has here, it's just making it look like the repairability of it is relatively low. So that doesn't mean of the vehicle in its entirety, just of the pack specifically, which I think, the expectations for that probably from the beginning as a structural element would have been that way. So anyway, more to come from Munro. They're just having a little bit of trouble with that foam at this point in time. Elon did say on Twitter today that this doesn't mean that there are any problems with recycling the 4680 pack. There had been some speculation because of this that maybe that makes it more difficult to recycle, but sounds like Tesla has obviously thought through that. So Elon just kind of commenting on that today, saying, yep, still planning to be able to recycle those cells, despite some of the difficulties there. All right, so getting into the Twitter stuff, I mean, that's kind of all we have for Tesla news today, but getting into the Twitter stuff, Elon, upon hearing the news, apparently of Twitter filing this lawsuit, tweeting out, "Oh, the irony, LOL." So just another tweet in the Twitter saga. What Twitter is asking for here, I know we've talked about how some of the merger agreement details had suggested that if there was a breakup and the merger was not consummated, then there'd be $1 billion penalty. That could go either way, whether it's on Twitter's end or on Elon's end. So there was some speculation that maybe that would be what the courts would sort out. But what Twitter is asking for here is specific performance, which means that they're asking the court to enforce the merger agreement in its entirety. So basically requesting that the court forces Elon to continue on with the acquisition. They're not just asking for that $1 billion breakup fee, which, I don't want to speak for Elon, but I think at this point, if he isn't actually interested in acquiring Twitter, it wouldn't seem to be the worst result. So that's what they're asking for. I have read this filing. It's about 62 pages. So I just want to kind of walk through what case Twitter is laying out here. I think they actually make a pretty strong case for themselves. Of course, this is their point of view, though, so it's just one side of the story. We'll have to wait and see kind of what the defense has to say. Musk would be the defense in this case. So don't want to be too premature with any judgments or anything on this case yet. But what Twitter is basically saying here is, from the beginning, Elon has been pursuing this transaction to happen very quickly. He structured it specifically in a way that would be seller friendly. They have direct quotes here from Elon saying that it was intended to make this easy on all to get a deal done as soon as possible. Then they go through how at the very beginning, very early stages of this deal, post acquisition news, Elon had talked about how spam and reducing spam on the platform was an important priority, which I think definitely they're making the case well that, Elon was aware of bot activity on the site, something that was a problem for Twitter even before he made this acquisition offer, just showing that awareness. So for him to then come around and, use that against Twitter as a reason for not acquiring is a little bit, for lack of a better word, a little bit of a reversal from, this earlier tone that Elon seemed to be carrying. So they kind of set it up that way. Then, of course, they get into the dispute over bot activity, which, despite what I was saying there, I'm not trying to say that isn't necessarily has any invalidity because of how Elon started out, but basically what they're talking about here is that, yes, there is information sharing required as part of the merger agreement, but what they emphasize is that it's related to the consummation of the transactions contemplated by the agreement. So they're basically saying, okay, they'll provide reasonable access, but it's not, this information sharing clause is not just free reign for any information that Musk requests. They then from there kind of walk through how detailed the requests have been from Elon and his team. And from their point of view, they have provided Elon with the information he has requested, but then they're only met with more information requests, which that's really where I think this is going to end up going in court is, what level of request is quote unquote reasonable access as they put here. Because from Twitter's end, they say, we've been disclosing for years that the bot activity we think is less than 5%, but we're not 100% sure about that. So Twitter's basically saying, hey, here's our data. And Elon, I think, is saying, this isn't enough. So from Twitter's perspective, it sounds like they're kind of providing everything that they have. And I think from Elon's perspective, Elon is just saying, this isn't enough. This isn't conclusive. So how you determine which side is correct on that, I'm not entirely sure. But that's what the court will have to kind of sort out. So that's really what the bulk of this is kind of arguing. They do make specific points here, kind of against Elon, which I'll come back to this page here. But one of the terms of the merger agreement is that there is a non-disparagement clause for both sides. And basically that requires each side to kind of get consent for public communications if they relate to the merger at all. So they say under this provision, Elon may only tweet so long as such tweets do not disparage the company or any of its representatives. They then go on to show many examples of Elon doing that. Obviously that's up for interpretation, but here is one that they, I think, make a strong case for. So if you're on Musk's legal team, you got to just be kind of shaking your head at some of these things, because it's very clear in the merger agreement that there is this non-disparagement clause. And then you have Elon, going on Twitter, tweeting things like this, tweeting and tagging the SEC to try to get them to investigate this company. It's pretty clear that these are, in my view, have an element of disparagement to them. So I think it definitely weakens Musk's case, in addition to the, kind of where we started off with Elon trying to make this deal happen quickly, talking about being aware of the spam. I think it's going to be a little bit more difficult for Elon to make his case than it might be for Twitter. Not a lawyer, just my initial read. And again, this is, obviously painted from Twitter's point of view. I would recommend reading it. I'll put the link down in the description if people want to read through this. It's not that long of a read, but it is pretty interesting to hear just sort of the back and forth. And there is stuff that, wasn't public previously in terms of communications between both sides. So anyway, getting back to that. So we talked about the information sharing, what Twitter has provided. They spend a lot of time talking about that. On this disparagement stuff, this is kind of related. So Elon was talking about how Twitter does a, sampling of 100 different followers or 100 different users on Twitter to kind of estimate their size, which I think if you take that data, definitely doesn't look robust enough. I think Twitter's arguing that they're doing a lot of other things too. They talk about how they've met with Musk and tried to explain those things anytime, or at least with Musk's teams to try to do that. But one thing was kind of interesting here. They talked about how they say that this was a misrepresentation of Twitter's sample size because they argue that their sampling estimate sets a total of approximately 9,000 accounts per quarter that are manually reviewed. So you've got this number of 100, you've got this number from Twitter saying 9,000. But if you look at a quarter is like 90 days. If you're doing 100 accounts for 90 days, that would get you to a total set, which it says here, a total set of approximately 9,000 accounts per quarter that are manually reviewed. So I think the 100 number here actually has some validity. And if that is the case, then I think it makes Twitter's argument a little bit more difficult if that's kind of, what they're doing. But that being said, I would be surprised if that's the level, given some of the other things that Twitter mentions throughout the suit. So anyway, it's just kind of interesting. So the non-disparagement we talked about those tweets, and then just kind of the last thing here that I think Twitter makes a strong case for is that, Musk is arguing that there's been a company material adverse effect. But, the Twitter says that they have not really supported that with any sort of evidence. Basically, on Musk's side, it's their team saying that they can't support that because Twitter's not giving them access to information. Twitter, and throughout this entire suit, is saying, hey, we're giving you guys everything that you're asking for. We're doing it as quickly as you can. And they do cite specific examples of that. So that's where we just need to get Musk's side to see whether or not those things are really accurate or what the other side of point of view is. But Twitter does very specifically go through case by case where they have given information, where they have been asked for more information, and then they have provided that, even where they view it as being being above and beyond the terms of the merger agreement. So I think that's, I don't want to spend the entire night here going through this, 60-page document. But again, it is very interesting to read. I do think Twitter makes a good case here, but I'm very curious to see what the case for the defense would be. As for when we might see that, or when we might get some sort of a conclusion on this, definitely not clear at this point in time, but the New York Times did get they obtained a memo that was sent out today by Twitter's general counsel to internal employees, saying that they have filed a motion for an expedited trial alongside this complaint, which is what we just went through, asking for the case to be heard in September. So September is what they're looking for, and they are seeking a 4-day trial. So it could still be a few months before we even get into any sort of trial. Obviously, there's possibility that things change before that. Could be some sort of settlement, but we know how Elon feels about that in general. Maybe not applicable for a case like this, but still, this might be looming for quite some time. So we'll just kind of have to wait and see on that. One thing that will be interesting to see over the next, probably just really the next day here, is if Elon does end up selling his significant stake in Twitter. We know he has about 9% ownership. So we'll be watching this tomorrow to see if Elon does file a Form 4. If he does sell any of those shares, he'll be required to disclose that. If he would have sold on Monday, that has to be disclosed by Wednesday. So tomorrow, if we do see a Form 4 from Elon, that would indicate obviously that he had sold. If not, he would still at least have held his shares through Monday, which would have been after he sent that letter filing for the termination. So we'll keep an eye on that. And then kind of the last thing for today, just an update, non-Twitter stuff, not really as Tesla related either, but an update on BYD. So kind of an interesting thing here. Bloomberg reported that there had been a significant block of BYD shares that had showed up as a part of the clearing system on the Hong Kong market. And that block matched the size of the stake that Berkshire Hathaway, Warren Buffett's Berkshire Hathaway, has in BYD. So I think we've talked about before how they have an investment there. Basically, with these stakes lining up, it could be an indicator that Berkshire Hathaway is exiting their position in BYD. That's definitely not confirmed yet, but BYD was down about 11% in trading on Tuesday after these reports came out. So kind of an interesting one to follow there. I certainly would not expect those funds to be diverted back into Tesla or anything like that. I know sometimes there's speculation of Buffett getting into Tesla, but I think especially given our current circumstances, probably not the most likely outcome. So wanted to pass that along as well. All right, I think that is it for today, though. As always, thank you for listening. Make sure you are subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast. And we'll see you tomorrow for the Wednesday, July 13th episode of Tesla Daily. Thank you.